Are you ready to witness history in the making? Because gold is about to break all-time highs. The king of metals is on for a meteoric rise, leaving the dollar in its dust and transforming your portfolio into a money machine. With dollar, you're holding onto something that's getting weaker every day. Gold keeps getting stronger and more valuable. This is called inflation, and it's hitting a 40-year peak. Because of this, people are turning away from the dollar and looking for safer places to put their money. And what's safer than gold? As we can see, in this bullish trend, bulls are in full control, and we can see really any retracement where bearish or bears are taking control of this trend. And not only in this structure, as we can see, if we zoom out, we have a lot of bullish pressure. Not only in this structure, we have two with a 50% retracement that we already analyzed. We traded this zone and was a very good one. But overall, after the peak at the all-time high, we've been on a overall bearish trend. That this one, it's one of the longest that we've ever had, because as you can see, you usually have bullish trends and fast drops, like very aggressive drops, like here. This was a very aggressive one. These are aggressive ones. So overall, bullish trends are the longest one, or the ones that prevail longer. So expect two things. In this case, we have this structure. We have the NRP at 1971. You can point it out at this zone if you want, but we're trading here. So we are pointing out this zone and 2000. Remember, 2009, it's a very big order block. Don't look for scalping or anything in that zone. It's also a major push here. 38 pips push and this big candle. So what's going on here? So why we have these big pushes? We can see that the increase in gold buys per central banks against USA treasuries is huge. Also, let's see that the fundamentals doesn't make sense anymore, as we can also check that the other chart is showing that the investor demand continues to fall. So really, we have mixed sentiment. We have this beautiful tweet that is posting a 30-year central bank gold demand that we usually, since the arrangement of the dollar gold or the new standard, we have that the central banks usually unload gold, but we have a very big purchase right now going on that started in 2022. So that's why we have those 30 pips candles. Just to close this fantastic analysis, let me break down the last part of the levels. Let's go first with the fundamentals. This week is loaded with triggers, or what I call diesel, especially this day. Let's keep an eye on this day. Why? Usually we were worried about NFP. I know everyone is worried about NFP every time, but especially this year, I've noticed that either Thursday is the biggest pips moves or the most volatile day, or this combination, these two fundamental news together. Any major news or any data that it's against dollar, it's gonna trigger that we go upside. I'm guessing I'm not guessing. This is not a game of guessing. Let's just react. So let's go with the levels that we care for the risk. So this is our NRP. Here I'm gonna draw my Fibonacci, and we can see if I'm gonna top it at the price more or less where I sold. So just to check that. I think it's important to note that the real price or the all-time high, it will always depend on every broker. But the reality is one. There's traders and there's keyboard warriors. So here's the trade. I sold gold at this price, 2776.53. It was a very unusual move. I saw 2081, so that will be the all-time high for me. For my broker, we expect this market open to be wild. We expect some action, so be careful. Note that these levels are the important ones. Look at the reaction of the three major levels at these zones. Remember, this is the 4-hour time frame, so just keep your levels marked, keep the risk low. Don't chase this area where we have 2000, and these levels are the major levels of break of this bullish trend, where we have a very important NRP at 1971. But if you are a short-term trader, you are looking for these zones, and especially for the break at 76. Remember, that's the real price. Show them facts, not words. Have a great day, guys.